Shri Dinanath Dubashi, MD and CEO, L&T Finance. Shri Ashok Chandra, ED, Canara Bank. Shri Rajan Pantel, ED, Yes Bank. Shri Sundeep Mohindru, CEO, M1 Exchange. Shri Rajiv Sabarwal, MD and CEO, Tata Capital. And our moderator for the session, Shri Hardik Shah, Managing Director and Partner, BCG. May I request Shri Hardik Shah to initiate the panel discussion? Over to you, sir.
The next 5-10 years belongs to SME lending. We have a very diverse set of views and a very different vantage point from different stakeholders here to think about how will SME lending evolve over the next 5-10 years. So, Mr. Raman, if I can start with you first. Sorry to catch you off guard. SME formalization is increasing at a rapid pace, right? The last 10 years, the last 5 years, the last 3 years, it's been increasing at a very rapid pace. SIDBI is, in some sense, the largest lender to MSMEs in the country. There's been a lot of initiatives taken to actually formalize this economy. How do you see this playing out in the next 3-5 years, and what are your thoughts on this?
So several very good questions all rolled into one, and I'll try and address each one of them. But at the outset, very big thank you to the IBA for inviting me here. It's certainly, sort of a very important annual session that happens in Bombay within the lending community. So first and foremost, the way we look at the MSME sector is it is sharply divided into GST registered and those which are not GST registered. So I think that is probably more from a banking point of view, from a risk point of view, that's how we sort of see the sector. The non-GST registered numbers are, I'll let you all take a pick, it's anywhere between 6 to 8 crore. So we have about roughly between 1.5 to 2 crore GST registered MSMEs, and therefore the tail is very long. We at SIDBI probably have on our balance sheet about 15% of the lending that goes to the MSMEs. So of course, as you would all know, most of this is a refinance book, but there is a large growing direct finance book. So how do we address the two segments? I think all of us sitting here and in the audience have probably cracked the code for lending to the GST entities. And therefore, we welcome more fintechs to help us get through that journey. But it is something that's growing at the rates of anywhere between 18 to 22% that is lending to the MSME sector. And therefore, whatever dreams the country has for 5 trillion or 15 trillion, I think a lot of it rides on the back of what the MSMEs are doing. And therefore, let me very briefly talk about the non-GST registered entities, because that's really where I think if we can bring in maybe another, say, 2 crore entities to become each a 5 crore turnover MSME, from being maybe 50 lakhs today or whatever that number is, I think we'll have traversed that path to our targets that much more easily. And therefore, what is the biggest stumbling block for them? Lack of data. And what do we really look for? We look for an information collateral versus a physical collateral. And that is really the way lending has to go forward. We need to get more data points for these entities, and therefore there are already a host of fintechs which have brought in their transactions, and I seriously believe that the payment aggregators are sitting on some of the most critical data. And how do we get that data to serve the banking community is really, I think, the biggest challenge that we have to face and we have to tackle. But having said that, the Udyam registration is only a very small but a significant part of this journey. And therefore, I'm happy to sort of share with you that the informal entities are being taken through the Udyam registration process with the help of the banks, MFIs, anybody who's dealt with them in the typically the informal lending sector. And therefore, we have crossed 10 million or 1 crore of registrations as of a few days ago. And this has been in the space of about 4 or 5 months. And we hope to do another 1 crore by the end of March. Now, this is really to signify that so many more entities will now get classified as PSL. And that certainly is a very, very big sort of way for the sector to transfer the portfolios from what is, the MFIs or the NBFCs which are operating close to the ground to the banks which are a little far away from the ground, and therefore we can have much more of MSME portfolio getting transferred to the banks. It frees up that much more capital for the guys who are lending closer to the ground. So I think this is really where we see the Udyam registration portal being used more actively by all lenders. It could be credit, it could be a lot of non-credit information that also flows, because now we have access to a very large number of informal entities. So let me just stop there.
I'll pick on one, interesting thing that you said, data collateral, right? And Mr. Dubashi, if I can come to you. You've been at the forefront of embracing digital across, different segments and different business lines. How do you see this playing out in the MSME lending space, right? And what has your experience been?
I think it's not only MSME, but across sectors, as you rightly said. Data is proving to be the new way of doing things. I mean, as Mr. Nilekani said a few years back, it's the WhatsApp movement of Indian lending, consumer lending or SME lending is coming because of data. I'll just take a very short time to explain. It's not just credit, but if you take sourcing, onboarding, credit, operations throughout, monitoring, and collections, everything data and digital is making things much more, I would say, democratically and reliably available to somebody who wants to use it. I'm a Harry Potter fan, and I say that Hogwarts help is always available at Hogwarts for those who ask for it. So it is very, very important that you need to trust data and you need to use it. I'll just give a small example of credit. There was a time when, let's say, MSME, the underwriting was based on balance sheets. Now, balance sheets were not only past data, but also for MSME, we may be all differing in the level of accuracy, but we all agree that it is not very reliable all the time. Right? Then came credit bureaus. So this was one axis. Now, account aggregator, second axis. And then the third axis will be various orthogonal signals which sir was referring to, like their behavior on payment platforms, their behavior on MSME interchange platforms. There are, government is setting up, many other people are setting up. There are so many different data points available for underwriting. You may use some, in some MSME you may get a few, some MSME you will get maximum. This is changing speed of availability, reliability of availability of credit, amount of credit, and the rate of credit. And the big movement which is happening from here is because of that movement from unorganized lenders to organized lenders. Now, how much that is every year, how we measure it, let's not get there. But if we look at, the next generation, which is going to happen over the next 5 to 10 years, I would think this is the big revolution happening in lending as a whole, and particularly sectors like MSME, which are always, demand is never a problem, is how can you reliably lend and get your money back? In a sector where physical security is, it's like God, right? You know it is there, but you never see it, or you never can use it really. So moving away from that, I think the time has been there for some time, and best is yet to come.
The best is yet to come. Mr. Seshadri, if I can come to you, and I know when we were speaking last week about this, I think there is still a belief that, now if there are good MSMEs, you can get financing from multiple avenues. There's a lot of, financing available out there. But still there's a dichotomy that a large number of MSMEs are still in the informal or the unorganized sector. And you've seen this journey over multiple roles, over multiple years, playing out. In your view, what is it that will take to break this, exponential growth of formalization, the access to formal financing?
You're addressing this to me, right?
Yes.
Wonderful. My belief is that the access to credit for the MSMEs has increased very dramatically. Um, as Mr. Dubashi was saying, the access to information has enabled many of us to process this very quickly and make credit available relatively easily. It's come to a point today that it's my belief that any MSME which is bankable will find credit in the banking system. So if credit is not available, it's not because the system is somehow warped and is not providing credit. It's that in the current context, the system doesn't find them bankable. I think the issue that we have on the MSME side is that right now, I think there's a mispricing of risk that is taking place, especially on the higher ticket size MSMEs. Some of them are priced finer than larger corporates. So it's an odd structure which is not appropriate. I believe that and is indicative of some strains that are likely to come in the future. The other thing that we notice on the MSME side is that growth, very often these entities rely on banks for growth. And there comes a time when the bank is unable to actually increase the limits, essentially because the capital structure of that entity is such that no further credit is possible because perforce, it appears as though you are, the debt to equity ratio moves to such a level that incremental capital is required at the other end. And one of the things that people need to think about is how to make capital available to these entities. And therefore, as credit has become relatively easier to obtain, capital scarcity is what is keeping incremental growth from occurring. That's my limited observation at this point. Thank you.
Got it. If I pick on two things, just moving to the next one, Mr. Rajan, if I can ask you, and you've seen this, a pristine quality book is really highly valued, especially in MSME, right? And we've seen highly valued. And, we've seen this cycle of bad MSME lending also play out in the last few years. What is the secret sauce and what should, lenders keep out for as they think about exponentially growing this book in the next few years?
So, if I have to dimension it between one, what is the actual scope which is available in MSME's space, and then correlate it to the quality as to how you have to maintain it. I think one of the key things which we have learned over the years is that lending on working capital should never be based on the asset which comes as a collateral. It always has to be on thick underwriting, which should be based on purely the cash flows, the future cash flows. So that is the basic fundamental, I think, which keeps you going. And at the same time, once you have assessed the fundamentals of the business, then it should be backed by the collateral. So I think it's a very fine balance between the two. As Mr. Sheshadri said, the pricing sometimes is too fine. I think one of the important thing is to price it right also. And write it, that again becomes a very fine balance, because there are always others after an experience of the customer who can possibly fly out. So you also have to see that retention. I think the best thing is to keep that relationship approach. Don't just keep it a lending relationship. If you really want to keep a good portfolio quality, that cannot be just based on your lending decision. It has to go much beyond it in terms of building the overall relationship, because SME is not just looking at just the lending. Lending is only a beginning. He has a lot of banking to do. He has cash management. He has trade forex opportunities available. He has banking needs. The promoter has banking needs. So one of the fundamental thing is that how you can enrich the entire ecosystem around the customer and build that relationship so thick that tomorrow your pricing balance does not get compromised by him flying out. So if you have an overall relationship with you, the customer will stay and he will make the book also grow and not come down, at the same time retain a quality customer with you.
Interesting thoughts. I'll pick on one of the things that you said, cash flow based lending and not rely on the asset as much, right? Sandeep, if I can come to you, as one of the largest receivables, threats platform, what's your experience been this in the past? If we were to talk to lenders, right, there was a view that this is in some sense a treasury play and not an MSME lending play, but it has really taken off in the last 6 to 12 months. What's changed and what are your experience around it?
Yeah, no, agreed. All the bankers are of the same view that trades is more of a treasury play. But it's a very beautiful phenomena which has emerged out of this is that in this treasury play, MSME is the winner. And so much so that 5 years ago, in this trades platform when we started, we were doing what, 5,000 crore a year versus this year we are doing 1,50,000 crore a year. So it's emerged as a completely 360-degree different view. And like Mr. Raman said, we are still touching, the amount of numbers of MSMEs that are there on the ground, we are still touching not more than 60, 70,000 MSMEs on trades. So essentially, the speed at which the money is flowing to them, the cost at which it is flowing to them, the legacy of asset-backed lending to them, all that has been broken with this help. And this has happened only with the help of technology. Now, as Mr. Dinanath was saying, data. So what we have changed the game in 23 in this year and just as recent as last month is that these MSMEs have kept a lot of legacy data on the platform of their relationship with their customers. How many times their invoices gets rejected, how many times their invoices gets approved, and of course all the backup of the cash flow and the bank statements and the GST on the with the platform and outside the platform. Now we are massaging that data and bringing it to 60 banks. So that democratizes that each bank doesn't have to do it every time. And the MSME doesn't have to go through the pain of dealing with each bank and bringing that data to the banks. Now, if a bank A has a credit appetite for X level, bank B has a credit appetite for a Y level, so accordingly they pick up their MSME and now start taking a credit risk on the MSME. So we are therefore moving from a treasury to a credit play. And hopefully this will help to go deeper and of course touch few more larger numbers as Mr. Raman has said.
Yeah, very interesting.
If I may add here, more and more platforms, of course, Mr. Mohindru's platform is one of the main ones, but even L&T Group, for example, has set up a platform called Sufin, which is basically a inter-SME platform for supplying to large companies. So for now, it is mainly L&T is the mother company, but as it goes, more and more large corporates we are hoping to add on. Now, same phenomenon, that one is simple supply chain credit, which is a simple way of doing things, right? But that data being there and the platform making it available to lenders can help lenders go beyond supply chain credit. And that will perhaps address Mr. Raman's point also, that even if you are below the GST threshold, because if GST data is available, lending is relatively easy. I mean, we have to be very thankful for the government and the GST authority that it is now available. But the smaller companies where it is not available, at least the top part of that, these platforms, whether it is the government platforms or private platforms, will help. It's maybe a year away, but it will come. Sure.
If I may just add on, I agree that, the historical practice of banks to always use collateral as a crutch for lending is perhaps not appropriate. And data makes it possible to understand cash flows and thereby leverage those cash flows to actually provide access to finance. But having said that, credit is a cyclical kind of thing where credit performance is very good and thereafter it deteriorates a lot and then it comes back, the good times come back. So on a through cycle basis, banks have to manage risk. And you must remember that we get fixed income returns on the loans that we make. Some of the loans that we make to these MSMEs are effectively in some form quasi-equity, because these are very highly levered institutions. So we are not making equity returns, we are making fixed income returns. And therefore, to underwrite all of this only on the basis of data would probably not be prudent. You do need collateral to ensure that on a through cycle basis you survive.
Got it. Mr. Sabharwal, if I can come to you, both the points around supply chain as well as platform play. You've seen both of these very closely as you've built the MSME lending book. What has your experience been as you think about these different dimensions of sourcing or the solutioning for the MSME, segment?
I think if you look at number of clients for banks or NBFCs, this would be the largest segment. For NBFCs, clearly this is one of the largest segments to whom we lend to. It could be in the form of, working capital, or it could be in the form of term loans. But it's a very, very large segment, and a segment which we still feel is relatively untapped and has a huge potential for growth. But, I quite agree with what Mr. Sheshadri mentioned. One of the big challenges which these entities have is they are undercapitalized. I think Mr. Raman is probably the right person to answer this question. While there is enough of debt flowing in, how do we ensure we create institutions which ensure that far more equity support is provided to them? I think SIDBI does it, but we probably need much more of support being provided to this. When we have seen a lot of PE companies and private capital move in, most of it has gone to these sort of entities, but probably not enough what is required. The other is, I think when we talk about data definitely helps us make better decisions. But we have to think of how can we take this to the next level? What can we do more that this segment grows a lot more? One is clearly equity. The other is, I still feel information can be made more easily available in a symmetrical manner to banks and NBFCs. I still feel there is some asymmetry which exists. For example, data from Krilsi doesn't flow to all institutions in the same manner as it should flow. So this makes it difficult. The other is, even when you talk about the Bureau, I think we can do far better in ensuring recency of data in the Bureau. If you look at the Bureau information also, data is either 60 to 90 days late. And in today's world of digital, when we can move money in seconds, and it's the same set of banks who are moving the money or a part of this ecosystem, why can't the information on the borrowers also not be available with just 24 hours of delay? Why does it need, 60 to 90 days for the information to be delayed? And these are some things, if we improve efficiency here, the credit flow can only become better.
Actually, what Mr. Sabharwal is saying is, just to adding to that, you see this information asymmetry and simultaneously MSME access to the financier. He has a relationship with one bank or two banks at the most, and therefore the cost of funding for the MSME is always very high. I mean, of course, there are other reasons for risk. Now, this is what digital has changed. Now, can we bring the information symmetry to all the financiers is something what we are aiming for as one of the digital platform. And similarly, the challenge that the MSME cannot approach 50 banks in one go, or he's sitting in a place, can he travel to a branch and the branch manager is equipped to handle his query? I mean, so that asymmetry we are breaking. So these are the two things, I mean, very nicely he has put it, and I can correlate that this is exactly what we are solving.
Mr. Chandra, if I can.
Just to add, you know, while you may be a means through which financing is happening based on a transaction, but the only thing which we need to guard against is that the same thing should not be financed again. And the only way for us to know it, of what financing has happened, if we don't have a delay of 60 to 90 days of this information flowing back to the lending institution through the bureau or through any other means. Today, you know, it's delayed by that much time. And in a digital world, I don't know why it should be delayed.
Yeah, no, agreed. So actually, 2-3 small points we have done is one is all the TREDS platform are symmetrically connected through the blockchain, so the invoice cannot be duplicated. And we are transferring the credit proceeds only to his working capital account. So these are the two small steps we have taken, and of course it is registered on Sarsai. So 3 steps have been taken, hopefully more should follow.
Mr. Chandra, if I can come to you, I think on building on the point of, you know, digital and what Sandeep mentioned around the branch manager, the query and the, you know, back and forth from the MSME perspective. If we think about, you know, the experience that the MSMEs go to avail this finance, there is still a lot of paperwork, there's still a lot of back and forth that happens, right? Are lenders actually digitizing the processes or just taking the physical process and digitalizing it in the, you know, IT world? How has that journey, how have you seen it, you know, play out, and where do you see this going forward?
So thank you very much, Hardik. Good afternoon to all of you. And thank you very much to FICCI and IBA for inviting me to this important discussion, which we are deliberating it. I think before touching that point, I will just emphasize the importance here and where we are. I think Raman sir has very rightly mentioned about the organized sector and unorganized sector. See, we have 634 lakh MSME units in the country. And the data which says that 97% of these units are under the unorganized sector. That is the challenge before all of us now. See, we can categorize our lending thought and the entire activity in 2 parts. One is the unorganized sector, what we are doing it, and for the organized sector. Because for the organized sector, we have a lot of data things in the pipeline where we can access those data points and take the decision. But the challenge before all of us is that how we can take the unorganized sector and bring it in the formal sector now. So that is one part, I think, where a lot of things have to happen now, both at the financial sector side also, the awareness level at the different association level also, so that the mass level outreach program can be organized and we can bring those sectors to the formal sector. I think there can be a massive, massive growth in the economy if we bring that. Now, your point is that the digital lending piece which we are doing it, is it just the paperwork and we are transforming to the digital? No, it is not that. And if you see the ecosystem for the 4 or 5 years back, there is a deep revolution that has happened in the digital payment side. I think we have all witnessed, and the world over they are recognizing that India is leading in the digital payment system. And if you see the next another 5 years, the revolution which is going to happen in the digital lending platform and digital lending system now. And when we talk about the digital lending, it is not about the corporate lending here we are talking about. Digital lending here means it is all the MSME system that is going to be digitized, and the lending to these sectors is going to be through the digital mode. Now, when we talk about the digital lending piece, it is not that traditional way of thinking and traditional way of doing that digital lending here. See, one is that cash flow based lending, that is most of the banks, they have initiated that. If we really want to penetrate to the MSME sector, I think we need to come out of the traditional way of thinking and traditional way of assessment. We need to change that entire model. So one is that the cash flow based lending. Second important thing, and which our bank, Canara Bank, has also initiated, and I think most of the bank also, they would have done that. straight away, whatever the GST returns that has been filed, or if the unit is new and 3 months or 6 months GST data is available, based on that itself, we are doing the funding, and it is STP journey now. Now we have the data, we have the integration with the GST, you have the account aggregator, data is available to you. You can access the CIC's data. So account statement you can read now. So with the fintech onboarding, you have the access to all those data points which is available in the system. Based on that, you have the business rule engines, which is deciding and which is forecasting and which is available to the MSME sector now. That is one piece. Like Mr. Mahendra mentioned about the trades platform. That is another very, very important thing. But how many MSMEs are onboarded on the trades platform? It is a totally seamless activity. And if we can engage more and more MSMEs to this trades platform, I think all the MSME units also will be beneficiary. See, today the challenge before MSME is that marketing is one point, a skill set is another point, and third, very, very important point is that realization of the receivables. That is the challenge. Liquidity is the immediate challenge before all the MSMEs now. Now, trades is the immediate solution to provide the liquidity in the system now. So I think the digital framework which all the banks which has been created, I think digital lending platforms, every bank has initiated, and the business rule engine for assessment of the credit is totally different, which we were doing it some 2-3 years back now.
You have a point.
I was going to make a point. The point that I was trying to make is information asymmetry is a fact of life. I mean, whatever you try to do, you can reduce it to a degree, but you can never get into the heads of the owner of that MSME unit. That, his intentions are only known to him. And it's impossible to reduce information asymmetry to zero. You can reduce it to a degree. The second point that I was trying to make is, or I'd like to make, is that making the TREDS platform very successful, I agree. But it is a bill that is accepted by a larger corporate, and fortunately the money goes to a smaller MSME. I think the one thing that we need to do is to bring back bankers' acceptances. So many of these MSMEs have banks who are lending to them. I think they should be put on the TREDS platform. Their bankers should be on that platform. Their bankers should accept the bill. Other people should discount it. That will give them a pricing advantage, and it'll also democratize credit in a much different way. Mr. Paintal, over to you.
Why wouldn't that bank only take that business? How will any other bank get the business?
It becomes an off-balance sheet asset for me, and it becomes a balance sheet asset for some other bank. I mean, it's a balance sheet management game, right, at the end of the day.
I don't want to listen to his comment at all. No, because it'll make difficult things for me.
There is another one very interesting piece. In fact, other day I was sharing to Raman sir when he was in Bangalore about the self-help groups. I think, see, the self-help groups in the country today, we have almost 12 millions which is registered now. And in fact, I have visited a lot of places and I had a good interaction with these groups. See, 12 million means average, if you say 15 to 20 members will be there in one group. So almost 15 to 18 crore people are already there in the SHG framework now. Now, do we have any mechanism as of now to track what is happening there? What digital transactions they are doing it? Whether they are there in the CICs? Whether they have any CIBIL scores? We don't have any tracking of those entire 18 crore people who are there, and they are doing a lot of activities. And finally, they are from the micro to a small and medium sector also they are coming in now. So what we have done now, in fact, with RBI Innovation Hub, we have partnered and we have initiated the entire digital journey, which you are talking about the digital journey. The opening of account for the self-help groups, their members, it is totally seamless now. Already we have done the pilot run and the live environment, the things are happening now. And once they are onboarded, based on the turnover in the account, automatically the process and the message goes to all the members that you are eligible for this much lending activity. this is the amount you are eligible for that. So there is a totally transparency for the entire group members. That message goes, and then once they accept that, there is a direct credit flows to the SHG account now. And there is a direct transfer is also available from the SHG account to the different SHG members. So the entire process, we are bringing it to the digital platform now. And we are, in fact, we had a last time discussion that we are going to bring it, linking it to the Udami portal now. So that, see, once the 5 months, 6 months, the SHG does the activity, there are members who are creating the direct activity on themselves now. But they are just like that, they are doing it. So if we bring it to the Udami portal, if they have that Udami license also, Udami certificate also, they become a part of the formal MSME system now. So from that 50,000, 1 lakh, 2 lakh loan, they can be eligible for the 10 lakh mudra loan. And finally, they can go for the 1 crore, 2 crore loans. I have seen that there are so many SHGs, they are doing a lot of big activities. But nowhere it is tracked and nowhere it is mapped. Their CIC score is 0, nothing. So I think we need to broad-base the entire thought process, broad-base the entire activity. And if you do that, I think there will be a really big revolution in the entire digital lending platform and digital lending space.
Just making a point, taking a few steps back, right? I mean, we can say that, you know, all these things are available only for the larger SMEs, MSMEs. There is a long tail. Frankly, those long tails, I don't know whether they come in MSME. There are programs like microloans, etc., where they come, but I will not even talk about that. Let us actually take a step back, go back 1 year. And if all of us see what is the change in this sector or lending to this sector that has happened in the last 1 year, it is just simply amazing. I think all the lenders, whether it is public sector, private sector, fintechs, have contributed well and have done pretty well. If you go 5 years back, you won't recognize the sector. Okay? So I think one way of saying that abhi bahut long tail baki hai and there is a lot to do, but also taking confidence, I'm not saying be complacent, but also taking confidence from what, not only the private sector. I mean, normally we say that innovation comes from private sector. In this sector, I think innovation has come from private sector, public sector, government. Innovation has come from government. I think that's what my optimism comes from, right? That if we say that it is an exponential rate of change, next 5 years can make, you know, if you ask me precisely how, it can happen. I'll just give you a very small example, right? We look at traditional way of underwriting, and then we look at, you know, the black box doing everything. Right? And often the problems are, or this change of way of shifting is in the mind, and not in the mind of top management of organizations. It is in the mind of the underwriter, who believes that if something goes wrong, tomorrow uska naukri jayega, right? There are ways of, I mean, my head of credit, even today believes that physical underwriting is the only way to do underwrite for, I know she believes that. Oh, usko बहुत कुछ convince करना पड़ता है, मारामारी करना पड़ता है, तो थोड़े होते हैं. So, you know, and that's the point. So, but there are tools available for that as well. There are now AI-based underwriting bots, which will co-underwrite along with the physical ones, right? So, which will read the information, and all the processing, which used to take a day, is now done in seconds by the bot and given it to you, to the underwriter, and underwriter can still apply his or her mind. So the industry will find a way. That's the point. I just put it as an example, but industry will find a way of, you know, progressing on this.
No, very well. Appreciate the point. But you know, when as banks or NBFCs, when we are building a portfolio, it's good to talk about digital. It is good to talk about, you know, various algos being used for underwriting, scorecards, BREs, etc., etc. But end of the day, you know, one thing which always have to be kept in mind is that ultimately there is a portfolio getting built. And any irrational exuberance can not just kill the institution, but also the clientele segment of large segment of the clientele. So I think that there needs to be a very, very fine balance. Most of the institutions, whether it is banks and BFCs with the help of fintechs, have very clearly segmented MSME into, somewhere it is the traditional way of underwriting, somewhere there are algos being used. 10 lakhs segment, I mean, if we just go back by 24 months back, was one of the biggest pain area, in spite of everybody trying to use every possible algo there. Uh, my view is that this is a very large segment. There are figures like 97% is unorganized. There are figures like which says only 14, 15% have an access to a formal credit. Rest all are still outside the thing. My view is that this 84%, 85% what we talk about is in the process of evolution, right? And they are the fresh customers coming with in a much more refined form. So they are getting through them, they are getting registered with GST, their businesses are expanding, they are coming up. So these are the new babies on the block who are just coming into the lending, arena. And this is a big opportunity which is available wherein a lot of these customers are shifting. Unfortunately or fortunately, today most of the banks and NBFCs are fighting for the same set of customers. So if you look at it, if there is 100 rupees lending being done by any institution, around 30 to 40% actually comes from takeover, right? And that is primarily because everybody is cognizant of the fact that that they have to build a better quality portfolio, and hence the pricing also, right? But if you go down the value chain and look at it, what is good for me, whether it is 10 lakhs, 50 lakhs, or that 1 lakh or 50 lakhs, whatever is the segment you want to play and want to go, in a hyper mode to say I'll acquire more customers and then live with them through their life cycle and see them growing. I think this has to be a very calibrated approach, and that is what is important for both the sector to prosper as well as the bank portfolios to prosper. We have seen the shift from corporate to retail, and I think the next wave is going to be going towards MSME. And hence the banks also have a responsibility that they take a very calibrated approach which can help the industry to grow in a very healthy manner.
If I can do one more pivot from the morning session, right? I think a lot has been spoken about the traditional SME lending, right? But if you look at, the next 5, 10, 15 years, sustainable financing will become really important, especially for the SME value chain. The larger corporates will have all the wherewithal to do this by themselves. The SMEs will need a lot of support and handholding. And Mrs. Barwal, if I can come to you, you've done a lot on this space in terms of, sustainable financing, ESG financing. How do you think, what all do lenders need to do to reorient the business model to actually think about this in a more structured manner?
First thing is, I think at one point of time, we used to feel that any step in that direction needs support from support from the government, because it's going to be more costlier or more difficult, to operate in a more in a segment which is more compliant on the ESG side. But I think things have changed, dramatically changed. If you look at the financing on the clean energy side, today it's much cheaper to operate that, get power from them rather than from the traditional sources. If you look at what's happened, and the government had demonstrated it in the EV side, especially on the buses side, what state governments are doing, it is now cheaper to operate, an EV bus rather than a traditional bus. Look at what smart meters have done to how consumption can be monitored and how more efficiency can be brought to the system. Rooftop, mixed response, but wherever it's been put up at a reasonable scale level, I think it has demonstrated tremendous advantages to the organizations. I think now it is well understood across everybody, whether it is banks or NBFCs, that this is not only right to do for the future, but it is very much viable to do. And if more support is given, then this is where the future lies. I think we have seen this in a lot of areas that there will always be a set of players who will be willing to be the first movers and willing to take the risk. And there will be a set of players who will wait for the sector to be discovered, to be very confident that everything is fine and then move in. So this will continue to happen in the future too. But from our perspective, the way we have looked at this sector, we've found it extremely viable, delivering better credit performance than the traditional sector. And that's the approach we will do. I think Didi has done also a lot of work in that area. And we are now seeing a lot of banks being active in this space.
Yeah, so I just wanted to sort of give my green tinge to the conversation. So I think the biggest challenge that, or let me say the opportunity that we sort of facing us is the 30 by 30 challenge. So that's really the fact that by 2030, we need to have 30% of vehicles being EV. So that number is today 90 million. So by 2030, you can add a few more million to it. And against 90 million, we have today not more than 4 million EVs. So I think everybody in this room and outside it put together, we need to create that entire industry from the battery to the manufacturing to the financing. It all has to come together. So this is a huge challenge that all of us face. And I think as financiers, we just have to get to the bottom of it. So I just wanted to mention more in terms of sharing information that large credit guarantee programs are being structured around this. So we've got something with the World Bank, with the ADB. Now all this is sort of underway at very final stages. And what's more important is that this is like a risk-sharing facility where 60 to 75% of the default will get covered. This is really important to get financiers to move more quickly and take those slightly more risky bets. The most important, or let me say the fastest growing sub-segment within this is really the EVs which the delivery boys use. And that is something which we are now financing, and I'm sure others are also doing that. So that is a very important challenge. Of course, as Rajiv very correctly said, I think our mantra is every MSME solar rooftop on their, on the top of their building. And that is the, again, the only way to go. I think the financing and the paybacks are very well understood in the MSME industry. So that is, again, something which is sort of moving fast. And just a final point, which I'd like to, again, share with all of you is, over time, we've been running something called an energy efficiency program, which again was done with the help of some World Bank funds. And we have therefore, over a period of say 10 years or so, developed a list of over 900 machineries which are continuously used by the MSMEs across different industry sectors. Now we have validated this using the BEE, the Bureau of Energy Efficiency, and we have got a calculation for practically all those machines for what is the GHG saving. And therefore, we are in a situation, and we hope to sort of throw that publicly to all the banks, that when you are financing a particular machinery, you have the ability to ping this database, get the calculations of how much is the GHG savings for that machine, and therefore you are genuinely adding to what we call as green assets. So, that's again something from a banking point of view, we all have to be, I think, acutely conscious of.
Mr. Raman has raised a very, very important point, and I always get tempted to add on to that, while we want that number of EVs, the power which will, power them should also be from the green energy side and not from the coal-fired side. So that is very important. That was the only thing I wanted to add.
Yeah, I think a lot of activities are happening towards this side also. I think a lot of funding is happening towards the renewable energy, the wind energy. I think almost all banks, including our bank, is also very, very aggressive in financing those sectors. Even EVs also, sir, I think including our bank, all banks are also very active in financing that. I think all of us are mindful of the 2030 target which we have in the system now. Now, another point which Mr. Rajan was talking about, the stress and other activities which are happening in the MSME space. Here also, sir, one analysis which we have done, and traditional way of financing which we were doing into the MSME, always we were thinking that MSME is a stressful sector, and traditionally also, if you see the stress level in the MSME was in the range of 17-18%. Another 13-14% was the NPA. That was the thing which were happening in the last 3-4 years back. And that was one of the very important reasons which all the financiers, we were afraid of going to the MSME sector for financing. Now we have done some analysis that last 3 years, whatever funding that has happened in the MSME space, and we were really surprised that the stress level which is there in this book is hardly 4 to 5%. And NPA is 0.04, 0.05%. Last 3 years financing to the MSME sector. So this gives a lot of insights and a lot of encouragement to go for the MSME financing. And today, we have a lot of data points which we are talking about that. So I think financing to today's environment to the MSME sector is a profitable one, both to the beneficiaries also and to the lenders also.
Just being cognizant of time, we have a few minutes if there are any questions from the audience.
Yeah, good afternoon. Yeah, my question is related to this TREDS platform, where most of the largest AAA, AA corporates also do not register themselves, or even if they register because of statutory requirement, MSME is not given listing over there. So, even we have a customer who has to recover more than 100 crore from AAA customers, but they cannot discount their bills or receive their money through this TREDS platform. So, though we discuss a lot, but practically since last 2-3 years, we are finding it's not happening.
No, I agree. The times are evolving. Like I said, 5 years ago, 5,000 crore. Now this year, 1,50,000 crore. The adoption by the corporates has gone up multiple times. Okay, so last year, in 6 months, about amongst the 3 TREDS platform, approximately 150 corporates must have adopted it. This year, in 6 months, 340 corporates have adopted it. So the rate at which the corporate adoption is going up is multifold, and primary because of the reason, and which is important for the whole industry to understand, because the cost of financing for the MSME using the corporate goodwill is going down, and as a result, he's passing on that cost benefit to his customer, which is the large corporate. And the cost of doing business for the large corporate has gone down. And thereby, now it's a reverse flow has started. We get a lot of cooperation and a lot of calls from the corporates that they want to start. So it's a matter of few more years, hopefully. Maybe the next FIBAC or next 2 FIBACs, we should be able to have a more positive view on this.
In fact, but just to add to what Sandeep's saying and just to sort of complete the story on the TREDS, now there has been a huge push from the government. Of course, all of you are aware that, many corporates have paid lip service, but this has changed, and he's completely right. And I think the state governments have now come into this in a very big way. So there are several state governments that are now forcing the state PSUs to come onto the TREDS platform. So it is galloping, and more importantly, it is no longer a play of large corporates, as correctly said, a treasury play. We actually have buyers who are not necessarily AA rated. And that is the move that is happening. So there is now more of a credit play which is going to come in. And we have scoring systems that have come in. So just to give an example, we have something called the fit rank. Now the fit rank is something, if one were to put it against every MSME on the TREDS platform, any financier would immediately have a look and say that, okay, this is the fit rank of that MSME. and therefore price the risk accordingly.
In fact,
Just for
Good
the
afternoon.
yeah, go ahead.
Just for
afternoon,
your
sir.
information, like in fact, large corporates are doing reverse factoring. So they're reducing over their cost further.
That's also trends, and it's
Right.
beneficial to the MSME at the end of the day, whether he goes way one or way two. And like what Raman sir is saying, and even Mr. Chandra said, the algorithmic way of sanctioning, the speed at which the sanction is happening by the big banks and the financiers on the platform, it has changed the game. The liquidity has gone up multifold. I mean, whether it should be Canara Bank, Tata Capital, I mean, we are experiencing it. It's gone up multifold, and the speed at which it comes, the sanctions come, is amazing.
Maybe one last question.
Hello. Afternoon, sir. I'm KK Gupta here from Research in India. Chandra sir mentioned that they switch over from assets-based lending to a cash flow lending. I want to know what is the outer limits for the assessment of the cash flow lending. Second question is, what about the collateral security? When we are providing cash flow lending, whether we are asking for any collateral. Second question is, for a pre-shipment credit, when SME has got an export order, they are not getting the facility of pre-shipment packing credit due to a non-availability of the collateral security. When you are having export credit guarantee cover, so why you are insisting, banker are insisting for a collateral security? That is the point. Please.
Yes. See, any assessment when we are talking about, especially for the larger, like 20 crore, 25 crore, then it goes by the assessment and your risk model. And based on the risk model only, any collateral or any other securities are getting decided. It is not that there is a thumb rule that this much collateral is must for this type of activity. It all depends upon what type of activity you are doing it, what is the potential risk that is involved in that, and based on that, every bank decides their collateral for that. Now, second point was that pre-shipment credit you are talking about. I think most of the banks, including our bank, is providing a very, very cheap lending facility for the all the export finance now. So I don't see any challenge as far as the any quality proposals that is there with any bank now.
Sorry,
Make
last
one point.
comments and we can then
One
close
last
it.
comment. We've been talking about data-driven decisioning. There is, unfortunately, a flip side to data-driven decisioning. Mr. Paintel very briefly mentioned it, that we are all going after the same type of customer. That is essentially driven by the fact that when you build a scorecard, the information value that arrives or that you get from the bureau-based attributes are so much higher than other attributes that all our scorecards start looking similar. And ultimately, all of us start going after the same customer. So on account of data, there could be poverty of credit that is, made available to certain section of society.
On that note, we'll close this. Thank you so much, everyone.
Thank you all dignitaries. Ladies and gentlemen, before I take you all over to the next session, we shall break for tea now, and we will meet again at 4:10 p.m. Tea has been arranged at the outside of this hall.